Well, will the RBA be the Grinch that stole Christmas 2023? Hi there everyone, welcome to the Traders Circle Weekly Market Update. Today is Tuesday, the 28th of November, 2023, and before I get into it, you do need to be aware that whatever I say is general advice only. It does not consider your personal financial circumstances, and you have to decide whether it's appropriate for you. So our market is really disconnected from markets in the Western world, markets in the developed world across the past sort of fortnight. We've seen US markets push back up towards their yearly highs. We've seen the Japanese market reach 30-year highs. We've seen big rallies in parts of Western Europe. And yet our market, though it has come off its lows, it's really been a bit lackluster on the push higher. Now, part of this could be the fact that we are traditionally quite skittish investors. It does take months of exuberance elsewhere for us to see small gains historically. However, I think another part of it is just how hawkish the RBA has been with regards to Australian interest rates and the Australian inflation story. As recently as this week, we had Governor Michelle Bullock basically state her view that excessive demand, local demand, was starting to become the cause for inflation, essentially. She blamed people spending money on things like sport and recreation, on things like dentistry, on things like the hairdresser, and she said that that was contributing towards inflation. Now, I think that in saying this, the RBA is either being silly and incorrect or deliberately misleading, and I think more likely deliberately misleading. We've seen reports from the OECD that say that inflation in Australia and much of the Western world is being caused by corporate profiteering more so than anything else. You could also attribute it to the amount of money that was created across the past few years. If anything, we've seen lackluster spending here in Australia. We saw Australian retail sales for the month of October today. That was a lot smaller than expected. It contracted by 0.2%. We've seen real wages struggle for the last 3 years. Australians have seen a historic amount of pay cuts in real terms, in inflation terms, across the past couple of years, and really in the last 30 years, to be honest. So to blame the consumer, to blame people spending on hairdressers, to blame people getting dental work done is incorrect, and it's not really what is causing this inflation. And to be honest, it points to the RBA's thoughts on the matter that these are the things that they singled out. At least, these are the things Michelle Bullock singled out when she spoke to a room of economists. It points to their thoughts on the matter because these are things that are traditionally, sole operators or small business, small sort of price takers, people who aren't sitting there profiteering and lifting prices greedily to increase their profits. People who basically lift prices due to their costs, people who lift prices to go with the market, more price-taking behavior. She singled that out because she didn't want to blame the price makers, I feel. The essential services that are lifting their prices at the moment, the insurance companies, in some cases the electricity retailers, despite the fact that wholesale electricity prices are down almost 50% from their peaks over the last 18 months, we're yet to see retail electricity prices come down. So to be honest, I think the RBA is just trying to spook the market, just trying to scare the market. They are being a bit misleading when they're doing that, but they're trying to send a message to people that they're not afraid to lift interest rates even further to try and deal with inflation, even though it's probably not going to have too strong an effect. And they have been calling it a very blunt instrument. They have been saying that it's going to hurt a lot of people if they do it, but they have to look after the welfare of all of Australia. Now that disconnect, sorry that I've gone over it a fair bit, is what I think has caused our underperformance this week. Just how hawkish they've been in the face of, dovish views everywhere else in the Western world. And that's sort of suppressed our market a fair bit. Now, I think they're going to remain hawkish until the economic data changes. We saw retail sales today, as I said. That was a contraction. It was smaller than expected. I think that's the first part of the puzzle. That should really start to soften their tone a little bit. But the real piece of the puzzle, the real important one, will be tomorrow's monthly CPI indicator. We want to see CPI really start to come down, and if it does, we might see the RBA soften their stance for next Tuesday's meeting. So next Tuesday we'll get the final RBA meeting for the year, the December meeting, and if that CPI indicator tomorrow is lower than expected, I think we'll start to see a bit less hawkish, let's say, of an RBA at that December meeting. Otherwise, if that CPI indicator remains elevated, there is a small chance of a rate rise that meeting, but I think more likely they'll remain quite hawkish, which will probably continue to suppress our stock market. Finally, we've got the weird of the week, and this one I'm going to talk about Magnus Energy. The ASX small cap space is often a bit of a place for cowboys, a bit of a place for sort of odd characters and odd stories, and this is no exception. Magnus Energy, an ASX listed company, starting to produce or trying to produce batteries in New York in the US, and they've had a bit of a colorful history. You may remember they took legal action against the online forum place Hot Copper to try and reveal user identities. Recently they've faced 2 suspensions from quotation, one in October as they didn't lodge their full year financial results with the ASX, and then 2 they were suspended in early November to clarify some stuff around a loan that they took out. The latest update is that they're heading into their AGM, and in the lead up to the AGM, the chairman Frank Pullis has taken out an AVO, an apprehended violence order, against shareholder Andrew John Price, who may or may not be a poster on those Hot Copper forums. So it could be related to the prior legal action against the Hot Copper forums. So they've taken, an AVO out against one of the shareholders. The shareholder may or may not turn up to the AGM. It's all going to be a bit of a kerfuffle. So that AGM is going to be on the 30th, in a couple of days' time, on Thursday. And get your popcorn ready. I imagine it's going to be a pretty interesting one as far as annual general meetings go. Alright, so let's have a look at the charts for this week. This is the ASX, the XJO, the top 200 stocks listed in Australia, and really we can see that though we have bounced for November, our gains have really run out over the last fortnight. Since the middle of November, we've peaked at 7,100 and we've been drifting lower, and now we're waiting to see if we're going to generate a higher trough than the previous trough, or if we're going to return to that level or go below it. We can still draw in a bit of a downtrend line here, but I do note that we have seen a higher peak in the short term, and there's a fair chance that we record a higher trough than our low in October. And so even though we might see a bit more downwards pressure in the short term, over the medium to longer term, I do think things are starting to look a little more positive. Like I said, the RBA I think is the only thing holding our market back from pushing up towards the levels it was around in the mid-year, sort of up above 7,100. Until the RBA softens their stance though, I think we're going to struggle to get through that 7,100 level. In the US, they've been on a monumental run, absolutely mammoth. They bottomed out again in late October, right around 4,100 index points, and across the month of November, they've rallied almost back to 4,600, a jump of over 10% in that time. Even though they have sort of slowed in their gains, they really haven't shown any signs of falling. If anything, they've just sort of continued to grind higher and higher, even though the pace of gains has slowed. I'd be looking for the 4,600 level in the next few weeks, and if they do see a pullback, I would expect a higher trough. The first target on the downside would be roughly 45.20 here. If that breaks, maybe we're going to go back towards this gap level, right around 44.50. Alright guys, I will wrap it up here for this week. It's a bit of a divergence for our market, for the Australian market. It is a bit underwhelming for the Australian market. We can blame that on the RBA. The RBA is blaming that on regular people, even though that's a bit disingenuous, almost a lie, I would say, from the RBA. But they're doing it because that's basically their mandate. They've got a blunt instrument and they're swinging it wildly. So we'll wrap it up there. Hope you guys enjoyed. If you did, let us know, and we'll see you in the next one. Bye for now.